Study session for the Ohio Division of Real Estate Realtor exam. My name is Michael Rapaski, and I'm the team leader here at Keller Williams Greater Metropolitan. Excited to have all you guys with us tonight as we help you prepare for that exam. If you could do me a solid while we are getting underway here, hop into the chat and let me know what you guys want to focus on during our time together this evening. You can usually get through 2 or 3 different sections. So if there's something that you want to cover, something that's been giving you grief, by all means, put it in the chat. We'll make sure we cover it. And if there are specific types of questions underneath that you want to get to, we can make sure we get to those as well. Contracts and financing, please. Contracts always going to make it to the top of my list, Gianna, so you'll never. And then the state brokerage. Do you just mean anything for the state brokerage exam, Will? Good. All right, you guys just saw me sneak down my last of my snack that's going to get me through this. So we've got ourselves a pretty good list here. So I'm going to start with contracts. Everybody needs to know contracts. It's the single largest one in the national exam. Then I know we got a few people on here who are state exam only. I'm going to hit a couple of those. We can come back to financing at the end if we have time, Gianna. And then, of course, guys, if you ever have anything that comes up as a question, reach out to me, text, email, whatever, or check some of our old recordings. We do post each one of these on our YouTube page, which I'll share at the end. But without any further ado, let's jump into contracts here and talk about what's coming. All right. So, question number one is, who is authorized to rescind a voidable contract? A, neither party, only a void contract can be rescinded. B, only the minor. C, the agent and the seller only. Or D, either party. Go ahead and hop into the chat. Give me an A, B, C, or D. If you have no idea what's going on here, go ahead and throw a question mark in the chat. Let me know that you don't know, and we can spend a little more time on it. All right, as the B's fill up the chat box, that's going to be correct. And again, guys, you've heard me talk about this. It's a poorly worded question, but the trigger here is the minor. Minors can't enter into contract. If they are, they're considered the injured party. Injured parties can void contracts, meaning they're voidable, but they do not have to be voided. So if somebody were to enter into a contract with a minor, or enter into contract, if somebody was to enter into contract under duress, or something like that, it is voidable, but not void. All right, question number 2. A seller signs an exclusive agency agreement with a broker. The day after the listing is signed, the seller's brother-in-law decides to make an offer on the property, and without knowing that the property has been listed. What statement is true? A, the buyer will have to pay a commission. B, since the buyer was found during the listing period, the broker is entitled to a commission. C, the seller will have to pay the commission of the broker. Or D, the broker is entitled to a commission. So key thing here is, what type of listing agreement do we have? Is it, and how does that impact what's going on here? And A, B, C, or D in the chat whenever you can, guys. All right, so we have some C's and some D's. This one, now the key here is understanding which type of agency agreement you have, right? And so, or which type of listing agreement you have, rather. So this is an exclusive agency agreement, which means that if the seller finds the buyer, that they will not have to pay a commission. If it was an exclusive right to sell, the broker, the seller would have to pay a commission, but the broker is not going to get paid in this one because, conceivably the brother-in-law is informed by the seller, not necessarily brought by the broker, versus, in which is why you only sign exclusive right to sell contracts. Earnest money is best described as A, good faith money deposited by the purchaser at the time of signing an offer. B, the money deposited by the purchaser with the broker / seller to pay for the expense of examining the title. C, the commission paid by the broker, or D, the consideration in the sale of a property. All right, earnest money is good faith money. And that is the long and the short of it. It's not required, but there are rules that there are some rules around it, around where it has to go, and who can hold it and what types of accounts it has to be held in, but it is not required. All right. If upon a receipt of purchase under certain terms, the seller makes a counteroffer, the prospective purchaser is A, bound by the agent's decision, B, bound to accept the counteroffer, C, relieved of the original offer, or D, bound by the original offer. All right, the C's flood the chat box, and that's going to be correct. So this is an important thing to make sure your clients understand. Make sure you understand for different questions on the test. They might not all be so straightforward, but a counteroffer is a rejection of the initial offer and the putting forth of a new and separate offer, which means that in the event that your client counters, if you're listening and they counter, and then the other party says, "Hey, thanks, but no thanks. We're going to take our toys and go home," then they can do just that. There is no way to go back and accept the original offer. That is a dead offer. Question number 5, a buyer made an earnest money deposit of $500 on a $40,000 house, but withdrew the offer before the seller accepted it. The broker should dispose of the buyer's earnest money by A, keeping it as a part of his commission, B, returning it to the buyer, C, paying it to the court, or D, giving it to the seller. All right. A lot of B's coming in here, and that's correct. Return it to the buyer because it never stopped being the buyer's money. It can go with the contract, but until that contract is accepted, it is still the buyer's money. And after the contract closes, it's the seller's money. It's everything in between, when it's neither the buyer nor the seller's money, that makes earnest money a little bit gummy. Question number 6, an agreement of sale is a contract between A, the buyer and seller, B, the buyer and the broker, C, the seller and the broker, or D, the seller, the buyer, and the mortgagee. Who is an agreement of sale a contract betwixt? All right. Agreement of sale is between buyer and seller. A listing agreement is between the seller and the broker. A buyer agency agreement is between the buyer and the broker. A mortgage is between the mortgagee and the mortgagor, and many times the client and the bank. But an agreement to sell, or a sales contract, is strictly between the buyer and the seller. Nobody else is involved. You are in that contract as a party to be paid by the seller, but you are not a party to that contract. All right, Mary buys Sally's property, which is subject to a mortgage. After 5 years of payment, Mary defaults and misses a payment. Which is the appropriate remedy for the original mortgager? A, the mortgager has no recourse since there was no assumption. B, they should sue Mary and Sally both, as they are both liable for the mortgage. C, they should sue only Sally, as Mary took on the property subject to a mortgage, but there was no assumption. Or D, they should sue only Mary, as she assumed Sally's mortgage. All right, we got a little bit of everything in here. Anybody have a really strong opinion? Anybody really confident and want to offer an explanation for their answer, or are we all just sort of like, yeah, this kind of feels right? Let's work through this one. Now, this is a tough question, I will tell you, and this is probably one of the harder ones from a contract standpoint. First of all, has there been assumption? No, we don't know that there's been assumption, right? So I would say that knocks out D is the answer, right? It doesn't necessarily, make A or C right, but it does knock out D because we don't know for a fact. No one said in this question that assumption is there. Now, who is the original mortgager, right? What is the appropriate remedy for the original mortgager? Shamika's right. It's Sally. And so this is, this is nuance, right? But the original mortgager is Sally because she took out the mortgage. The bank in that case is the mortgagee because we actually give a mortgage to the bank. So knowing that mortgager is Sally means that Mary's defaulted against Sally. So Sally's not going to sue herself. We know that there's been no assumption. The bank is the bank won't. Sorry, Shamika. In this case, we don't really have a mortgagee in the answer. So Sally's not going to sue herself and Mary both. She really has no recourse here because there was no assumption of the loan. I think should be the correct answer. In this question, Sally's the mortgager. Yeah, see, most people confuse mortgager and mortgagee. Mortgagee is the bank. Mary bought the property subject to the mortgage and stopped making payments to her. So Sally's still on the hook. If she would have sold the property and Mary would have assumed the mortgage, it changes everything. But we don't know that has happened here. All right, question number 8. When an offer is presented, the seller may A, reject the offer, B, accept it so it becomes a contract, C, do any of these answers, or D, make a counter offer. That's right. Accept, reject, or counter. Any of these are doable for your client. All right. A lender qualifies a new borrower who signs a note and mortgage. Then the same terms of the note and mortgage are transferred to a new mortgager, relieving the original mortgager of liability. This is known as A, defeasance, B, assignment, C, novation, or D, subrogation. All right, the C's have it, and it is C. Substitution of a new contract with the withdrawing party being relieved of liability is novation. Assignment is the transferring of one party's interest in the contract to somebody else. The assigner is not relieved of liability. Subrogation is substituting one creditor for another, and defeasance declares a mortgage satisfied. So yes, novation is correct. All right, guys, similar question to what we had before. A seller signs an exclusive right to sell agreement with a broker. However, the very next day, the brother-in-law makes an offer on the property, not realizing that it's been placed in a listing. Which statement is true? A, no commission for the broker. B, seller found the buyer listings void. C, broker entitled to a commission. Or D, seller doesn't have to pay one. You guys got it. Exclusive right to sell means you get paid no matter what. An option. A, requires the optioner to complete a purchase if the optionee so elects. B, makes the seller liable for a commission. C, gives the optionee an easement on the property. Or D, keeps the offer open for a specified time. A is going to be correct here. That is exactly what an option does. You pre-negotiate the terms on the front end, and then it gives the option to an individual who is, at another point in the contract to execute it. All right, the law requiring real estate contracts to be in writing to be enforceable is A, the statute of limitations, B, the written instrument law, C, the statute of frauds, or D, the parole evidence law. Bingo, statute of frauds has to be in writing to be enforceable. Question number 13, a legal remedy that would compel a vendor to execute a deed pursuant to a valid land installment contract is known as A, the writ of execution, B, the execution of sales, C, the equity of redemption, or D, specific performance. The legal remedy that would compel such a behavior is, lots of D's in the chat, is going to be specific performance. That is the remedy available when you complete a land installment contract and the seller or the vendor refuses to turn over the deed. Question number 14, a seller signs a listing agreement that commences today and ends on December 31st of this year. The listing agent tries as hard as possible, but cannot find a buyer who is interested in the property. On the first of the year, the listing is terminated by A, statute of frauds, B, unilateral agreement, C, seller rescission, or D, expiration. All right, you guys are right. Pretty straightforward. All listings have to be in writing. They have to have an end date so that they can expire. The listing doesn't have an end date, no go. Oops, ignore where I clicked. If a broker receives two offers for the same house at the same time, one from an agent of cooperating brokerage and another from his own agent, broker should A, submit both offers, B, submit the agent's offer to the seller first, C, submit the cooperating broker's offer to the seller first, or D, reject both offers. And yes, of course, the right thing to do is submit both offers. Good job, guys. Cooked through those. As I always say, contracts is a great one to invest time into. It is going to be the foundation for a lot of other questions and is also the single largest section on the exam. All right, let's take a look at some state level stuff. License law and rules of the Ohio Real Estate Commission is going to be one of the larger of the four sections on your state exam. So we will we'll pop in there and see where that gets us to. All right, a seller gave her agent a check for getting the house sold so quickly. What must the salesperson do with the check? A, give the check to the broker. B, keep the check regardless of the amount. C, give the check back to the seller. Or D, the agent may keep the check if it's less than $10,000. The answer is A, give the check to the broker. Any commissions or rewards associated with the sale of a property have to be processed through the brokerage. Doesn't mean you can't accept it, just means you can't accept it in your name or cash it. A seller and broker agree upon a listing that would pay the broker a 6% commission if the broker finds a ready, willing, and able buyer for the seller's home. The broker finds a buyer who meets the seller's terms, but the seller refuses to pay the broker's commission. What remedy can the broker pursue? A, file a suit for specific performance. B, file a complaint with the Ohio Real Estate Commission. C, sue the seller for the unpaid commission. Or D, file a lien against the seller's residence for an unpaid commission. All right, a lot of D's in here. A lot of D's in here, so we'll go with D. The answer is actually C. You have to sue the seller for the unpaid commission. If it were a commercial property, you could put a broker's lien on the property. If it were a commercial lease situation, but if the seller refused to pay a commission, you have to sue him. Filing a suit for specific performance may sound like the right answer, but we just learned specific performance is related to valid land contracts and the refusal to turn over the deed. So this is where you would have to file suit. Filing a complaint in the Ohio Real Estate Commission is not going to be effective because the Ohio Real Estate Commission only cares about realtors, not about clients. They care about clients, but if you're going to file a complaint, it would be against another realtor, not against the client. The commission is not going to disallow somebody from buying, selling, or investing in real estate. So liens only exist on the commercial side of things. You'd have to sue for the unpaid commission. Question number 3, the rate of commission that may be charged on the sale of an improved property is A, the rate agreed upon by the broker and the sales associate, B, the rate agreed upon by the broker and the property owner, C, 6%, or D, the rate agreed upon by the buyer and the sales associate. What is the standard rate of commission? And as bees flood the chat box, that is correct. It is set between the seller and the broker. And in our office, you can set it. Some offices have a minimum or maximum fee that they will allow agents to charge on their behalf. We trust you to make good decisions with your business to ensure that you are in a position to help your clients and make yourself some money. All right, question number 4. An agent receives an earnest money check of $1,500. It would be considered commingling funds if the agent A, held the check until closing, B, placed the check in his commercial checking account, C, deposited the check in his broker's trust account, or D, turned the check over to the seller. Which one is commingling? So the funds are supposed to go into the broker's trust account. So to put them in your own commercial checking account would be commingling those funds. If they go in any fund other than the broker's trust account, it could be or would be commingling. Holding the check and not cashing, it's fine. Turning the check over to or I shouldn't say it's fine. You do whatever the contract tells you to, but it's not commingling if you hold it. It's not commingling if you give it to the seller. It's only commingling if you put the wrong funds into the right funds into the wrong account. And then conversely, conversion is using funds from the right account for the wrong use. You're converting their use. A real estate agent listed a property that was vacant. The agent ran a machine to make the room smell good to cover the odor of animal waste. Is the agent obligated to disclose that if not for the machine, the rooms would smell bad? A, no, agent must tell only the broker. B, no, the agent must remove the machine. C, if the odor would remain after the machine is removed, then yes, the buyer must be told about the pet damage. Or D, caveat emptor, ergo buyer's problem. All right, lots of C's, make it right. Yes, if the agent is aware of a hidden defect, it must be disclosed. The closing occurred on September 30th, 2012. Under Ohio license law, the soonest a broker can dispose of the file is the same day on 7 years later, the same day 2 years later, the same day 3 years later, or the end of that calendar year. Yes, 3 years to the day, all files must be held onto. Cannot dispose of them prior. Who can be affected by lead poisoning? A, a pregnant woman, B, elderly, C, anyone, or D, children. Anybody and everybody, guys. Lead poisoning is bad. All right, a seller tells a listing agent her home has been treated for termites a decade ago. Before listing the property, the agent should A, talk to planning and zoning, B, talk to the neighbors, C, tell the seller not to disclose the infestation as it was longer than 5 years ago, or D, tell the seller to disclose. D is right. Disclose, disclose, disclose. All right, the commission shall suspend for a minimum of 2 months or revoke the license of any broker or sales agent found guilty of their A, second, B, first, C, third, or D, fourth fair housing violation. How many fair housing violations until you are absolutely positively required to have a 2-month suspension or potentially have your license revoked. The A's have it. It is to your second offense. I promise you, it is unlikely that you will get to a second offense with our office. We take it very seriously, as should you. Fair housing is the real deal. When advertising a listing, a broker offers buyers a $2,000 carpet allowance. What statement is true? A, the seller can sue the broker for fraud. B, the broker does not need to disclose this inducement because the listing is his and he is not the buyer's broker. C, this is unethical. Or D, as long as the broker discloses the inducement in the contract, it is perfectly legitimate. And that is correct. Inducements, as long as they do not involve a game of chance, can be used to compel somebody to buy or sell, as long as they are defined in the appropriate contract. In this case, because it is an inducement for the buyer, it has to show up in the purchase contract. If it was an inducement for the seller to list with you, it does not need to show up in the purchase agreement. It has nothing to do with the buyer, but it does have to show up in the listing agreement in the contract between the the seller and the seller broker. All right, question number 11. An agent is advertising his own property for sale. What information must appear in any advertisement that the agent places in the newspaper? A, the types of agency being offered. B, the fact that the agent is the owner. C, any material relationships between the agent and any potential buyer. Or D, the rate of compensation of other brokers. When you are selling a home as for sale by owner, as a real estate agent, you must disclose in all advertisements that you are in fact an agent owner. That means the sign, that means your Facebook post, that means anything that you do to outwardly communicate to clients or customers or clients or other brokers that this is an agent-owned property. All right, a broker advised a salesperson not to take a listing because the seller did not want anyone to know about the hidden defect of the house. What must the salesperson do? A, sue the seller for being unethical. B, tell the seller they can't take the listing. C, demand the commission. Or D, take the listing, but ask the seller not to tell the broker. Nobody better answer D. That's all I'm going to say. B, tell the seller you can't take the listing. Not going to take listings if we can't disclose what we're supposed to disclose. Question number 13. A broker's license could be suspended or revoked for what action? A, holding a raffle for a TV for all those who attended an open house. B, offering a free radio to anyone who signs a 5-year lease. C, purchasing a homeowner's warranty for all of his sellers as a marketing tool. Or D, giving a bottle of wine to all clients who bought homes through him last year. Which one of these is going to which is going to call into question the old real estate license? Offering a free radio, making the receipt of the radio contingent upon making a lease is a violation of license law. That is correct. The raffle for the open house, not a big deal because there's no contract. There's nothing compelled. You just show up, walk in, get in the raffle, walk out. No big deal. But the fact that to get the free radio, I got to sign a 5-year lease. Oh boy, that must be a nice radio. Question number 14. What protected group is covered under the Ohio Civil Rights Act, but not the Civil Rights Law of 1968? Sorry, is it A, the handicap, B, national origin, C, ancestry, or D, sex? And as a few of you have jumped in the chat, ancestry is going to be the case. National origin, handicap, and sex are covered under both statutes. Ohio civil rights law covers ancestry. And again, guys, there's a bunch of different varieties, things covered and not covered. I encourage you, make yourself a little grid. right? This law, this law, this law, this law, Ohio, national, federal, whatever, and then list everything that's protected. And look for what's not. It's easier to remember what's not protected by each one than try and remember like, oh, it's these 5 things for this one and this 4 for the other. It's easier to say these 2 are not protected, these 3 are not protected. You give yourself easier work. And again, I encourage you to draw that out, and then as soon as you get into the exam on your scrap paper, draw it out again for memory, and then you can brain dump that, give yourself a little bit less to worry about. When a broker does not wish a salesperson to continue with the company, the broker A must tell the agent, then return the license. B must tell the agent 30 days before sending the license back. C must send the agent within 3 days of sending the license back. Or D is out of luck because the license may not be returned. All right, the C is C's flood the chat box. That's correct. Must tell the agent immediately, send the license back, and then send a letter. Send a letter within just a few days of doing that. All right, question number 16. At what point must earnest money be deposited into the broker's trust account? A, according to the terms of contract. B, within 48 hours or the terms of the contract, whatever comes first. C, immediately. Or D, once the offer is accepted. You nailed it, guys. Whatever the contract says goes when it comes to earnest money. That takes precedent. If they tell you to take the earnest money, put it in a bottle, throw it into the ocean, then that's what you're going to do with the earnest money, because that's what the contract says. Question number 17. An agent told the buyer that they would have the option of tapping into the new sewer when in fact tapping into the new sewer was mandatory. The agent's actions violates A, the task force on agency, B, license law, C, code of ethics, or D, federal law. We have a flurry of B's and maybe a couple C's in the chat. Looks like the B's have it, and we'll go with that. That is correct. It is. License law prohibits knowingly making misrepresentations, which that would certainly be. Under what condition can an assistant talk with a client about the terms of an offer? A, when the assistant has the authority of the agent. B, when all the agents are out of the office. C, when the client doesn't mind dealing with the agent. Or D, when the assistant has a license to practice real estate. And the D's are going to have it here, guys, and that's correct. Unlicensed assistants cannot even disclose the list price for a listing. Some agents will employ licensed assistants for just such a reason. Question number 19. What law requires a broker's license to be placed in proximity of the Federal Fair Housing Act? Is it A, Federal Fair Housing Poster, excuse me, RESPA, B, Federal Fair Housing Act, C, Ohio License Law, or D, the Ohio Civil Rights Act? We got some B's, we got some C's and D's. We'll go with B, and it's C. Ohio license law requires it, that it be in proximity to the fair housing poster. The Federal Fair Housing Act only mandates that the poster be there, right? And then finally, neither the Civil Rights Act nor RESPA govern the placement of the broker's license. So Federal Fair Housing says you got to have a Federal Fair Housing poster. Ohio license law says the broker's license has to be within proximity of said poster. Question number 20, real estate recovery fund. claims are limited to what dollar amount? Is it A, 2,500, B, 800, C, 40,000, or D, $1 million? Looks like the C's have it, and 40 grand is going to be where you top out for that. 2,500 is the amount for a violation to the real estate commission. 800 is the maximum amount of a non-interest bearing loan that can be received for pre-licensing classes. And $1 million is the minimum amount that needs to be kept in the recovery fund. All right, good job, gang. We probably got time for at least one more. I'm going to throw down on, let's see here. I think state governance and real estate profession should only be 5 or 10 questions. So let's pop in here. Let's knock it out. Yeah, 5 questions. These are good ones. For these of you guys on the state exam, and of course, I will drop in again all of the information around how many questions belong what, and it's also in your PSI bulletin. Guys, when you got the information from PSI about scheduling your exam, it's pretty awesome. They give you the breakdown of questions and some practice questions and some places to go for some more information. So make sure you take advantage of that. If you don't have that bulletin, shoot me an email after this and I'll shoot it over to you, and it can be helpful. All right, question number 1. The Ohio Real Estate Commission has the duty to A, hear appeals regarding claims against the recovery fund, B, administer real estate license law, C, maintain, investigate, and audit the records of brokers, or D, appoint hearing examiners and with the approval of probate court, appoint ancillary trustees upon the death of a broker. Ooh. All right, we got a few D's. We're, just dipping our toe in the water here. Let's go with it. It's actually A. They're going to hear appeals. So administering license law is something that the division does. Maintaining, investigating, and auditing records is not going to be them. And then appoint hearing examiners, and with the approval of probate court, appoint ancillary trustees. That is not going to be them either. They are going to be responsible for those other duties. All belong to the superintendent, which is a part of the Ohio Division of Real Estate. So the commission is going to be your recovery fund people. How many members of the commission can belong to the same political party? A3, B1, C2, D5. There are 5 individuals on the commission, and only 3 of them, no more than 3, can belong to the same political party, as it is a government appointment. Question number 3, the duties of the Ohio Real Estate Commission include promoting A, the code of ethics, B, compliance with the Board of Realtors bylaws, C, the membership in the Board of Realtors, or D, the canon of ethics. Code or canon, code or canon, code or canon. It's going to be canon. My bad joke every time. Canons can hurt you, and the Ohio Real Estate Commission is the one where if you violate the canon of ethics, it could cost you your license. Code of ethics is something put forward by the Board of Realtors. Board of Realtors is a professional organization, has no affiliation with the state bodies. They're not legal entities. Question number 4, what is not a duty of both the Superintendent of Real Estate and the Ohio Real Estate Commission? Is it A, investigate complaints and subpoena witnesses, B, revoke and suspend licenses, C, apply to a court for an injunction, restraining order, or D, issue fines? The D's seem to have it here, and the answer is actually B, revoke and suspend licenses. So investigating complaints and witnessing, subpoenaing witnesses, applying a court injunction or restraining order, or issuing fines are all duties of the superintendent and the commission. Oh, sorry, I read that question wrong. I think I might have not emphasized the not. Only the commission can revoke, may revoke or suspend licenses. Only the commission may revoke or suspend licenses. The other ones, both of them can do. Question number 5. The Ohio Real Estate Commission consists of A, 4 brokers and a layperson, B, 1 broker and 4 lay people, C, no more than 4 members of one political party, or D, 5 brokers with at least 10 years experience. It has been a while since I've done this section myself, guys, and I'm between A or D as well. I should know this. All right, we got 2 A's and 2 D's. All right. Oh, the A's have it. Oh my goodness, they're correct. That is correct. 4 brokers, 1 lay person, no more than 3 from the same political party. The brokers do need to have 10 years of experience. Good job, gang. Good job. Good vibes. All right, we got time for one more small one. Let's go to financing. I think somebody threw that out. There should be only 5 or 10 questions here. And we're going to power through in the next 12 minutes to get you guys, well, not to get you home, to get me home. All right, question number 1. Which class of individuals is protected under the Equal Credit Opportunity Act, but not under the Federal Fair Housing Act? Is it A, marital status, B, ancestry, C, sex, or D, familial status? Which one is protected? Excuse me. The people say A, and they're correct. Marital status is protected under the Federal Fair Housing Act. Is not protected, but is under the Equal Credit Opportunity Act. So somebody cannot ping you on from a credit standpoint or deny you access to credit because you were married. The rate of mills for Columbus is 97, and the assessment level in the community is 35%. For a property, the value of $280,000, what will annual taxes be? So will they be A, $21,160, B, $9,506, C, $12,000, or D, $6,500? If you don't know how to do this problem, simply put in the chat, Mike, I don't know how to do this problem, and I will take you through it. But I'm going to give a couple seconds here for everybody to work it. For those of you who do know how to, I want you to be able to. All right. Seeing some question marks, seeing some not sures, seeing some blank stares. All right, guys. So first things first, this is a multi-prop problem. When you see assessment rate or assessment level or equalization factor, those are, you're going to take whatever that is and multiply it by the value of the home. So right now we've got this assessment level for the community is 35%. It means 35% of your home value is what we're basing your taxes off of, right? So we're going to take the 280,000 and we're going to multiply it by 0.35, right? Because that's what 35% is as a decimal. So that's 98,000 $98,000 is the assessed value. And then we know that we're dealing with mills, right? So whenever you see mills, you divide by what? Somebody help me out. Put it in the chat. You know it. I know it. We all know it, but somebody needs to say it. You divide by 1,000. Whoops, not 7,000. So 98,000 divided by 1,000 is 98. Funny how that works out. Now, the rate of mills is 97. So that means we are being charged at a rate of 97 mills. So whatever a mill is worth, in this case, 1 mill is worth $98. So we take 97 mills times $98 and we get 9,506. That is the tax for this property in Columbus. So first things first, you see assessment rate or equalization rate, you know that's going against the value of the home to get you to a smaller number. Second thing, when you see mills, you divide by 1,000. That's going to get you the value of one single mill. From there, it's pretty simple. How many mills are taxes? There's 97 mills on a $98, 97 units on $98 mill. Great. Next thing you know, you're there. Question number 3. Gray purchases a home from Black. Gray will pay $700 a month in a balloon payment, and title transfer will take place in 5 years. This is known as A, amortized loan, B, contract for deed, C, purchase money mortgage, or D, a blanket mortgage. Some D's in there. If I told you the answer wasn't D, what would your second guess be? All right. Looks like we've got 3 A's and 3 C's. Somebody break the tie. All right. It's really going to suck if this is B. And it is. I knew it. That's why I said it. It is a contract for deed, right? There's no loan involved here. No loan involved. There's no loan of money. There's no bank involved. There's no mortgage rate. An amortized loan is going to be one where you pay a certain amount of money that goes towards interest and principal each month. We don't actually know if there's any interest being charged here. There's none stated. A purchase money mortgage is where it's all up front involving the bank. That's the thing that we're most commonly going to see whenever we do a deal is a purchase money mortgage. You get all the purchase money through a mortgage at the time of closing. A blanket mortgage is a mortgage that goes over multiple properties, right? So if we know what each financial instrument is, we could have backed into a contract for the deed, which is all this is. I'm going to give you $700 a month for 5 years, and then we can give you another sum of money, and then you're going to give me the deed. It's a land contract for a deed. Man, that was tough. I know it was hard for you guys. It was hard for me, as everything in the chat box was not a B. But hey, you know what? That's why we do these things. If the price of carpeting is $19 per square yard, and how much will it cost then to carpet a room that is 15 by 15? Is it A, $42.75, B, $750, C, $475, or D, $1,100? So pretty straightforward one here. Brianna, love that answer. Per square yard, not per square foot. If you did 15 times 15 times 19, you got $4,275. Now you tell me, would you pay $4,200 for carpet in a 15 by 15 room? I don't think you would. So you want to do 5 times 5, right? It's 3 feet in a yard. So to get to square yards, we need the measurements in yards. So 5 yards times 5 yards is 25 yards times $19 per square yard is $475. Bob's your uncle, and that's the right answer. Whew. It is Monday, Jeff. I'll give you that. But guys, look, here's the thing. And you hear me talk about this every week, and I stress it, like, you got to put yourself in a position to be able to take the time to read the entire question. And I know, like, yeah, we're cooking through these last few questions here tonight, but when you're taking the exam, when you're in that position, right, you give it away a point here, which could make the difference, right, in passing or not passing. You give away too many, you don't even give yourself a chance. So just be real careful there. All right, this will be the last one for tonight. If an investor wants a 9% rate of return on his investments, how much income would the property have to generate to justify a purchase price of $980,000? $980,000 and a 9% return. A, 20,000, B, 88,200, C, 5,000, or D, 100,000 American dollars. All right, Stacy and Brianna bringing it down with B, and that's correct, guys. Pretty straightforward here. Price times rate equals return, or equals income, right? Price times rate equals income. Price divided by income equals rate. Income divided by rate equals price, right? It's just, you can move that equation around however you want, but price times rate equals income. All right, team, that is going to do it for this evening. I appreciate you all being here. Love the opportunity to be in conversation with you around this stuff. If you could please, and I know a couple of you have reached out to me, but if you need a retake form, if you need the link to additional study sessions, if you are like, hey, I sent my retake down and I still haven't been able to schedule yet. If you haven't dropped me a note yet, like, do that. If you did drop me a note, you haven't heard back, drop me another one. I've got a bunch of stuff going with the Ohio Division of Real Estate, so I'm trying to get a bunch of this stuff sorted out. They are backed up. They are, a little bit behind. There is, but we'll do anything that we can to get you guys help. And if you haven't scheduled yet, and you're like, hey, I didn't get anything, but I feel like I should be able to, let me know. I can help with that. Or if you're like, hey, I haven't even sent my application down yet, definitely get with me. From the day you send your application, you're looking at about 4 weeks until you can sit for the exam. So waste not, want not, guys. Let's make the most of our time here. And of course, anything and everything you need outside of these sessions, like if you're stuck on something, you have a question, shoot me a text, shoot me an email. I'll get back to you. And don't feel like you're annoying me. Feel free to rattle my cage if you don't hear back from me. A lot of stuff going on right now, but I'm committed to helping you guys pass your exam. That's all for me for tonight, guys. Thank you very much. And we will see you. We will not see you next week. We have a career night in our Pepper Pike office and online. So we are bumping this. There will not be a study session, but you are all welcome to join us and catch up again on all the things that make Keller Williams Greater Metropolitan so great. And if not, you can join us. You can, next week I would just watch some recordings of our previous ones. And yes, the study set or the career night is in person in our Pepper Pike office. It'll be held virtually for any West Siders who don't want to get their passport stamped to come all the way over. All right. If you guys need anything or have any questions about that, please let me know. I will send out an email about the study session being postponed for a week. All right. As always, if you need anything, let me know. Have a wonderful evening.